With the retirees that my team and I are working with, one of the biggest fears that we continue to hear from the potential families we're working with is how to navigate healthcare expenses and the different coverage options and just this whole cloud of uncertainty that is around that topic. It just feels like something that's very uncertain. Fidelity recently came out with some numbers that says a couple going into retirement is likely to spend over $300,000 on healthcare expenses throughout their entire retirement. Now, I know that's a pretty big number, maybe made you jump a little bit, but before you panic, that's why I made this video. I think navigating healthcare costs is actually something that is not too difficult to plan around, and we can actually put a plan in place where you feel peace and confidence navigating those expenses, even with the uncertainty that comes with healthcare expenses in retirement. So let's jump into what your coverage options are, how we're navigating these conversations with our clients, and hopefully give you some great action items from this video going into your own healthcare planning. So if you are looking to retire before you are 65, you have several different options. Simplest one, of course, is just to jump on your spouse's plan. If your spouse is still working, your simplest, your cheapest option is going to be to jump on to their plan with them. Don't want to spend too much time there because I feel like that's the obvious option and easiest option, but I don't want it to go without saying that that is still an option, so don't overcomplicate things unnecessarily. Second option to think through here is COBRA coverage. So if you're going to be leaving your employer, you're retiring, you can continue that employer-sponsored healthcare coverage for 18 months after your employment. Caveats there are that likely your employer is paying a portion of your health insurance premiums, so that will not be the case going forward. You will still get the group rates for that healthcare coverage, but you will have to be paying the full amount of your premium. And this can be a great tool to bridge the gap until you get to be 65 and can file for Medicare, get Medicare coverage. And COBRA used to really not be a favorable option for many of you several years ago because it was, and honestly still is, very expensive. But other health insurance options, trying to get it through the marketplace and other private carriers, health insurance is very expensive. But now that COBRA coverage is actually pretty competitive with some of those marketplace plans, and something to think through. Yet you will probably see your COBRA premium and you're gonna think, wow, that's a lot of money. But remember, you only have to pay that for a limited amount of time before you make that jump to having Medicare. So I would encourage you, if you can afford it, don't wait until 65 to retire because of how expensive options like COBRA are if you can afford to pay for COBRA and things like that. You don't want to be looking to save money unnecessarily when you can still make that jump into retirement. So I just want to be encouraging you to not write off some of these options for you that would allow you to retire sooner just because you may feel like they are too expensive, because they are probably expensive. But if you can afford it, being able to retire sooner is such a huge win, and I don't want you to lose that option. And then last option here, if you're looking to retire before 65, I was mentioning this when talking through COBRA, but you can go through the marketplace, look at getting a private health insurance plan as well. And this is a space in your retirement planning where working with a certified financial planner can really add a lot of value. Let's say you have several different types of investment accounts, your taxable accounts. Say you have some Roth IRAs or Roth accounts, and then you also have your pre-tax accounts, your 401k IRA. Well, maybe you can look to be pulling income from your more tax favored accounts to lower your taxable income and therefore lower how much your premiums are getting some of these private insurance plans. So this is a great space where you can look to do some planning like that, and I would encourage looking to work with a certified financial planner on doing that. And then here we are next. You have reached age 65, the glory land in a sense of healthcare coverage for retirement. You're now able to file for Medicare. So don't want to spend too much time here because once you get to this point, I mean, this is your best option most of the time. And here I would just encourage you to work with a Medicare specialist. We have one that we work closely with who would be happy to connect you. And that's just because you really do have so many options out there with your Advantage plans and other supplemental plans that you want to find the right plan that works for you and that's cost effective for you. Don't want to get sold something that doesn't fit your situation. So just be diligent about finding the plan that works well for you once you reach age 65. And then last thing I want to talk through here is just how to be budgeting for healthcare. We talked about that $300,000 and above dollar figure that couples will be spending on healthcare throughout their retirement. And like we said, that number can be intimidating. But remember, that's spread out over 20 to 30 years. So that can be an expense that we are looking to plan for in your cash flows. So just remember that that can be a number that you can be looking to plan for in your yearly cash flows and budgeting for, in a sense, and make that much more manageable than just hearing that $300,000 number. So if you plan, yes. So if you're just planning it like any other expense, your food, insurance, travel, things like that, it becomes a much more predictable thing that you can account for along the way. And if you have various tools in your arsenal, like a health savings account, that can partner really well with your healthcare strategy. You can pay your Medicare bills from your HSA, and you can have that HSA just be growing and knowing that's a space that you can have reserved for medical expenses down the road, pull the money from that tax-free for those medical expenses. And it's, I think, really healthy and helpful to remember that you're not necessarily trying to eliminate that cost, because you can't, but you're just trying to eliminate the surprise that typically comes for most people with these types of expenses and costs. You're planning proactively so that there are no surprises. And of course, you can't account for everything, but being diligent about accounting for as much as you can just really helps to bring that peace and confidence, which is a huge piece to having a successful retirement. And then our firm, we're called Stewardship Investments. We're a Christian-based financial planning firm. And so I just want to encourage you, as we're wrapping up the video here, as believers, we're called to plan diligently and to rest in God's provision, God's sovereignty. So even though making the jump to retirement and these various planning aspects, like planning for your income and your healthcare expenses, they can be scary. They can bring a lot of fear. We can rest in God being our provider, Him providing resources where we can be learning and partnering with experts to help make that transition less fearful as well. Thank you so much for watching this video. I hope it was helpful, just having some nuggets here and there to think through with your healthcare planning going into retirement. If you'd like to walk through your strategy and your plan around your healthcare in retirement, or if you don't have a plan and would like to put one in place, be happy to help. You can schedule a free retirement planning call with myself in the link below.